Rachel, let us home in on some of the data that's due out today. CPI inflation. What is at stake here? Because we know a lot of people have told us that it's all about jobs these days. It's not so much about inflation, as that seems to be more under control. But if the jobs market isn't cracking as quickly as we thought it was, some people are starting to think about inflation again.
I think that's exactly the situation that the market is finding itself in. And we're kind of at this interesting inflection point where the market has taken an awful lot of risk off the table. You know, when we went into the jobs report last week, it was a question of, are we going to see a 50 basis point cut or a 25 basis point cut in November? Now, we're only 80% priced for a cut at all in November. So there's been a huge amount of money kind of taken out of the market, and that's largely been on the fact that we have these inflation kind of fears starting to resurface, this idea that inflation's not dead and that the Fed is going to need to start thinking about that part of its mandate again. So I think when we look at these figures, we're not necessarily going to see the market taking massive reassurance from kind of the inflationary numbers that we see if they come in line or if they do show indeed some kind of easing in inflationary pressures as we've been kind of trending lower. But if we do see those kind of surprise on the upside, if inflation is still running hotter than the expectations would suggest, that could be something that really sort of prompts another leg for markets, given that we've already seen a huge sell-off, a huge kind of reining in of those expectations for Fed cuts. I think this could be kind of like potentially a catalyst for that to kind of run further.
There's a chart that's kind of entertaining me at the moment, and a few days ago we were talking about the 1970s, and it's overlay charts. You can take them, maybe you don't like them, maybe you do, but it's basically inflation now versus inflation in the 70s. Let's just bring it up, and what it shows you is basically inflation picks up, goes down, the white line's the 70s, the blue line is now. How big a fear is there in the market that inflation does take off? How big a fear is there in the market that we see yields going back up to 5-6% in the 10-year? Are people talking about that actively at the moment?
Very much so. And I think, you know, a lot of people are talking about this kind of no landing scenario now. Rather than a hard landing or a soft landing as the economy slows, we're thinking about no landing. The idea that the economy starts to re-accelerate again. And I think kind of when you look at sort of the yields, we've really been seeing that in the last kind of couple of days. You know, you've been seeing those yields kind of backing up. We've now got the 10-year over 4% again. Yeah. It's going to be very interesting once we get past the election, where there's a lot of talk about the inflationary policies of both of the two presidential candidates, whether we start to see that narrative take a bigger hold in markets. At the moment, we're still at the beginning of a Fed cutting cycle, but the question is going to be, how much can the Fed really cut? Is it 2 cuts, 3 cuts, and then we stop and stay higher for longer? Or do they continue on this path lower as the market is currently predicting?
Is that reflected in the fact that we're looking at a 10-year that's at 407 right now? What kind of ceiling are we looking at?
It's a good question. I mean, I think like sort of back in the kind of height of the cycle, we were looking at 5% as kind of the point at which we peaked and started to come down. There's definitely no kind of barrier to us going back to that level if inflation starts to reassert itself.